Welcome everybody. This is the Thursday evening Viper trading webinar. If you are here to learn about trading the futures markets using the Viper tools, you're absolutely in the right place. Tonight's topic is proper use of leverage. Of course, we'll be covering many other things in addition to that, but that's one of the primary topics tonight. First, we're going to knock our standard disclaimer out of the way, so let's go ahead and take care of that. All communications from Viper Trading Systems are for educational purposes only. Futures and Forex trading does involve risk, and the risks involved, and you do assume all risks, and all trading decisions are your own sole discretion. Okay, now that that's out of the way, let's get over to some charts here and look at some trade setups. I want to share something with the team here before we get too far down the road on trades, and I've shown this before in other I think it was in the last webinar. Let me shift to screen 1 here. Okay, let me get off of the disclaimer over to screen 1. Okay, you should see a 1440 chart on the left, which is emulates a daily bar. Without the gaps. That's why we do it, 1440 minute. And of course you can see our standard trading chart here on the right that we use in the room. Let me scrunch the one on the left a little bit here and quickly explain how and why I use this chart. By the way, this is something I don't really use too much intraday. You know, I don't sit and stare at the 1440 minute. I don't want to overstate the use of it. I just want to illustrate a couple of things that you might, if you want to pull it up and kind of check it out, you know, you might glean some you know, something useful from it. What I want to show is this. This is the average true range down here. Now the average true range shows, it's self-explanatory, of course, is the range, and it's 14 period average true range. And I just use this for purposes of seeing how much it's a measurement of volatility. It's a measurement of volatility. So when the ATR is high, of course, it goes without saying that you have large bars and there's large movement intraday. So for instance, if you take a look at this swath of time, this was Brexit, of course. Everybody remembers Brexit, right? The whole Britain leaving the euro deal. Remember that? All right, so there's this huge chunk of volatility back here. This was back in mid-June, right? Now you can see that we went NASDAQ, and almost all the equity charts look pretty much like this. But what kind of trend have we been in since the Brexit on the equities? Yeah, pretty much up, right? Pretty much trending up. Now, I want to make note, you have to factor this in a little bit in the fact that some days might be down days, right? Okay, see these little red candles in here? So what we have to be careful of doing here is we can't just say, well, since it's an uptrend, I'm just going to buy. I'm going to go long all day, every day. I'm just going to go long. For the past month and a half, I should have been taking long trades. Well, intraday, we may find that there is a little bit of counter trend movement where you get a sell-off day. And so it may very well have been appropriate to short on these days, right? All we're trying to do from this is get a sense of what the range is, get a couple of support and resistance levels out of here, and maybe, you know, get something out of here that will help us intraday. Now, I want you to focus on this area right here. This is the past week and a half. I'm going to blow this up so you get a really sense of what's going on now. Look at what's happening right now. What has happened to the volatility? What has happened to the volatility? Take a look at these bars right here. 1, 2, 3, 4. This is beginning forming now. This is the new trading session forming here. This little spinning top. Let me blow this up so we get a better sense. On NASDAQ. And like I said, most of them look the same. This was today. This was today right here. This little spinning top bar was the entire trading day, was that little tiny bar. What has happened to the ATR? It's at a 6-month, almost a year low. It's dried up. Volatility has completely dried up. It's pushing these highs, and every time it gets up near this 1850, anywhere above 4,800, it just the volatility just shrivels up. In fact, for the better part of last week, you spent the entire week in this tiny, tiny little range right here. Now, what is this telling us, and how do we use this information, and how does this affect us intraday? Now that we know that we're in these extremely tight ranges with very, very tight, you can actually blow this up and put these support and resistance levels right on your charts. First of all, that's one of the things you can get out of this, right? Blow this up, actually get these numbers, and then put those levels right on your chart so that you know that when it gets anywhere up near these levels, it's probably going to pull back. And when you get down here, it's going to find support, and you're going to spend most of the time right around this 4,800. Yes? So with conditions as they are, and seasonally, most of you, and I've said this before, August tends to be the slowest month, choppiest month of them all. A lot of traders don't even trade August. They just take the whole month off. And the next 2 weeks are probably going to look a lot like this, unless there's some global news event. Now, of course, you got the Fed on Friday, the Jackson Hole, what's her name? Her little speech tomorrow. You might get some movement out of that, but we're gonna probably be range bound and choppy for the next week and a half in through Yellen. That's right. Symposium or whatever that thing is. She's going to do a little speech up there, and everybody's speculating is she going to be hawkish and all manner of things coming out of it. But I think we're going to keep this low volatility in through Labor Day, which is a week from Monday. And then seasonally, what tends to happen if we went back a year, you go ahead and do that. Do a 1440 chart on your instruments that you like to trade. Go back a whole year and then look at last September and last fall, and you'll see that this volatility just gradually picks up until into the winter, the holidays, and then the new part of the new year, volatility cranks back up where it should, back up into here. Yeah, you can do that, John. He's asking, can you put a line on a chart and have it translate globally to all your other charts of the same instrument? And that would be global crosshair. Everybody, if you want to do that, if you're ever looking at 2 or 3 charts and you want to have the crosshair translate. So let's do that real quick on NASDAQ. So here's today. Here's the entire day. So here was the top of today. And here is it over here. You got to activate it on both charts. Just very quickly, I'll do this. So put the global on here. All right, so here was today. Here was today on the left. So here you can see that here's the top of the trading day right up here. We can see it, resistance, 94. You can take a line. Oops, see, no, that's the thing. It gets a little squirrely if you're not careful with it. You can take a line. It's not going to let me do it. Yeah, there it is. And you put it right on your chart. Here's the bottom of today right here. That's the entire trading day right there. And we get another little thing here. It gets a little screwy. I'm sorry, everybody. John, you were asking about this. Yeah, so, it gets a little hairy. And so there's the bottom of your trading session. The entire day was spent in this range right here. So intraday, now that you know these levels and they're already on your chart, plus you've put maybe your pre-market levels on your chart. So that's how you do it. I'm going to change it back, okay? Yeah, so it's global pointer, global crosshair. Yeah, like that. Pointer, global crosshair. Okay, yeah, let's look at a couple other ones real quick and then we'll get on with this. Here's YM. Very similar situation. See these dojis? See these long doji candles? It just can't, every time it gets up near this 18,600, it just, that's like, this is like all-time highs, right? And I saw this pattern back in the 90s when you had the whole, the internet bubble thing where it was hitting fresh high. Like every day we were hitting fresh highs. Fresh highs, record fresh highs on all the indices. And then you get these little tiny dinky pullbacks like this, right? Right back up, and then you take them out. Now, the thing that's interesting about this is that we've been up here a couple, 3, 4 times, even over here, and it just can't take it out. So there's a lot of speculation that, and I'm sure you've heard it from the pundits on the Squawk Box, that we're going to get some kind of sell-off. Everybody's saying it, right? It's got to correct 10, 20%. You hear all manner of numbers in there. The fact of the matter is, intraday, we didn't really care too much about this other than support and resistance, and knowing that we probably need to put our little scalper hats on, right? When we have days like this, see, here's today. Here's this little spinning top on YM. Same thing, right? Same thing. We know it's going to be, we got to put our scalper hat on. Or if you don't like scalping, you're just going to have to stand down and watch it, or be very, very choosy in your spots. We'll look at one more here. People have been asking about ES. I want to show you real quick what's going on with ES here before we go on to something else. Excuse me. You think there's been some tight ranges. Wait till you see this ES chart. Yeah, you can select all charts. Yeah, that's how you do that, Walter. Similar deal. All right, you can see here, right? Volatility is at a 6-month low. Volatility is all but dried up on ES. Just like the other equities, of course, you can see today was this little tiny spinning top right here. And it's been just hovering between, you got support down here around 2170 and resistance up just above the 80 at 85. Anytime it wicks up, but anywhere near 90, they push it right back down. It's just large institutions, big banks, big trading houses. They're keeping it right in this trading range. All their algorithms, they run it up here, they take their profits, they short it, just like we do, right? They get down into here, they cover their shorts, they buy it. As long as it's in that range, that's what you're going to get on ES. It's going to stay right in that range right there. And then eventually what's going to happen, it's going to break down, start to trend back down, or it's going to capitulate and push up, break through, and continue upward. And that might not happen until after Labor Day. It could happen tomorrow. We don't know. But what this is basically telling you is you've got to deal with the fact that you're range-bound, choppy, and you need to be scalping. The big runner things probably just aren't going to happen. You might get a rare day once a week with a big news event that shakes it loose. So let's translate that. I don't know, if you can, pull up a 1440 and look at your instrument, and you can study this. Find support and resistance, put it on your charts. That's how I use it. All right, now let's take a look at NASDAQ for today. By the way, when we talk about the principle of leverage, what does that mean? The principle of leverage. When we say I'm going to use leverage when I'm trading today, what does that mean? Does that mean you take a big crowbar and you can lift something heavy up with it? Like a rock or something in your backyard? You use one of those big long crowbar kind of deals. You can lift something heavy up with it. Multiple contracts. That's exactly what that means. Leverage means multiple contracts. 2 contracts or more would be considered leverage. And so in hindsight, looking at NASDAQ, knowing what we know, did anybody trade NASDAQ today, by the way? Anybody fight your way through this mess? Anybody fight this battle? Excuse me. I got to tell you, in all honesty, here, I'm going to put 630 up here. I fought it for a little while, and then I gave up on it. I really did. I just gave up on it. NASDAQ can be such a cantankerous little thing sometimes. You just say, you know what, I just can't take any more of you. I'm done with you. Brian K., you made $1,000 trading NASDAQ today? Wow, good for you. Michael P., David H. made a little bit of money with some scalps. You scratched out after 3 hours of trading, Doug. Yeah, I hear you on that one. So anyway, just a quick recap. You can see that, you know, and we kind of knew this. I mean, how do we know this ahead of time? I'm going to put another line on here. I'm going to lighten these lines up too. I don't know. I think they used to be yellow. I don't know when they got the dark blue. Stand by 1 second, please. I'll make these yellow. There we go. Just give me a set default, apply. I think that's just so much cleaner. I would go so far as to put one more line right here. It was a pre-market. You know, if you were looking at the pre-market, your lines would have been pretty much kind of. No, yeah, you can make the case that you actually inside of the pre-market session, you really had, and you could make the argument that coming into the open, you were starting to trend down a little bit, right? So just, I know Gary had the room open early. I don't know if did anybody catch this short right off the mid-band before the market opened, right here? Anybody catch that? Brian K. John, I see your comments. I can only repeat half of that. Saying I took a predictor and wrote it. Tough sledding. Yeah. I mean, let's play this out real quick here, and you know what? The rest of the equities look almost pretty much the same. Stand by. I'm getting my charts all locking up. Stand by 1 second, please. Yeah, so let's just quickly recap how this played out right before the open, at the open, and into the first hour and a half of it. All right, so here's the pre-market session. We have our swing highs up here. We have our bottom of our trading range. We have the tighter range inside of the overall day range that it was in the pre-market session. We put our lines on our charts. We realized that as long as we stay within the confines of these lines, that we are range bound and choppy, and we have to trade accordingly. We're probably not going to get big runs until we break out. Here we're looking for shorts. We started to sell off a little bit. We checked the bottom of the range. And then right at the open, there was a little bit of chop. Some of you may have caught the short side of this here, where it was kind of trying to get right back up to the mid-band right in here. And there's probably a predictor there, by the way. I'm just going to put this on. Yeah, the predictors were right at the mid-band there. See them? And yet another one down here. See the predictors sitting right at support, which turned out to be the bottom edge of trading the day. Excuse me. Now this is right at the open. We're looking, all this activity I'm showing right now occurred within the first 4 to 5 minutes of the market being open right here. So you did, arguably you got a little short here. You got a little scalper short and another short down to the swing. You got it? Okay, good, Dave H. Now here's the weird thing is it kind of shot back. If you remember Nazi in the room, it kind of shot right back up in our faces. Remember bipped down here, caught that, it took the stops out, and then came and consolidated right above the mid-band. I remember saying to box this in, remember? And let it go either way, because we're right in the range. It could go either way. Yeah, good for you. And then so then we got the long trade, and we bipped all the way up to there, and we came back down. Now we're at about 7 o'clock. We stopped out of the long. Remember, we had a trail stop in here. We got taken out. Came up almost to this swing right here. So see how these lines come into play throughout the course of the trading morning? We already knew this line from back at 2 o'clock overnight. This is our pre-market line. We came within a few ticks of it. We knew to get out of it up here, right? Comes right back to the mid-band. I think we reboxed it at 7. We did have some news. It was minor impact. We started to break down. We checked that support level one more time, and then we started whipping around in a very tight range. It was at this point here, right around 7 o'clock, that I stopped trading NASDAQ. Now, does that mean that you had to quit trading NASDAQ? No. let me put another line in here, okay? Let me show you something. You can scalp this. I mean, this is the very lowest edge of scalping tradability right in here. So you've got support. The mid-band's right in the middle, right? Support's at 73 and change, and resistance is at 80 and change. So what's that? That's 6 or 7 times 4. Yeah, you're right at 20, 28, 5, 28 ticks. Anybody scalp this? Was anybody still trading NASDAQ scalping inside of here at this point? 7 o'clock, right after 7. I'm not a big fan. No, a couple of you got it. Most of you didn't. Yeah, I just for me personally, I can't. I'm not a big fan of this type of setup, and so when I see it, I usually avoid it. Yeah, so I stayed out of all this. Some of you might have traded it and caught it, and then that's pretty much what she did the rest of the day. She came up one more time, pops up, checks that top, comes around. We get a lot of slopopotamus right here. I definitely was done by this. I would put this on the pretty much borderline untradeable. You know, right in here. This sloppy mess right here and this sloppy mess right here, just not tradable. So in regards to leverage, when we think about the principle of putting more contracts on, would it be a good idea to put more contracts on in a market that looks like this? Is this a load the boat day in your opinion? Is this a put 20 contract on the deal day? When we talk about the principle of leverage. No. Heck no. Some of you are saying a lot worse than heck no. Absolutely not. This is a textbook example of a day where you're not going to want to leverage up. You're not going to put a lot of contracts on here because the thing that we say is more contracts equals more risk. So you're putting more risk on. So when you put 2 contracts on, of course, it goes without saying that if you're used to trading 1 contract and you put 2 on, you're doubling your risk. Right? Tripling your risk, 3, 4, 5, all the way up to 10 or 20 or however many you can put on at a time at a clip. But we already knew back here in the pre-market session, our lines were here. And by the time we got into the market about 5, 10, 15 minutes, certainly before 7 o'clock, and we weren't getting any real breakout run moves, we knew we were stuck in this range, right? Yeah, Brian, he slipped out a little word there today, I know. He, you know, been my friend. I've known him a long time. We've been business partners for it's like 7, 8 years. I've never heard him swear in the room, not once, ever. So that was funny. That was kind of funny. Very, very rare moment for Gary. But yeah, it was a stick in the mud. You know, however you want to put it, it was a stick in the mud. Especially this stuff right here. I got to tell you, when I see this starting to form, here's how you can tell. Let me show you. Excuse me. Let me show you real quick here. Here's how I know. When you see this on NASI, let me get this box out of the way real quick here. Stop. There. Okay. All right. All right. So we're already chopping around. I'm already really not enamored with what it's doing here, and so I'm standing down away from it in the first place. But it does get a push up, and I'm starting to say to myself, you know what? I'm watching this here, and I start saying to myself, in my head, what I'm saying as I see this is I say to myself, you know, I'll tell you what, I see it coming up to hit here. If it pulls back in here and starts to behave itself and finds some kind of rhythm where, you know, it contrasts with what you're seeing right here. So it comes back, it tries to get to the mid band, and then it tries to bounce, and it's all yellow and sideways, and it's really slopopotamus and around in here, right? It's not really holding support. It's not getting back up into here. It's not really testing anything in a clean way. See how the bars are kind of shotgunning around yellow in a very sort of disparate way? I don't like that. I don't like this at all. When I start to see this is my first clue to stand down and not even look at it until it gets out of this funky little mess it's in. Now look, some people might say, hey, you can get right in the middle of that and scalp it. But, you know, you're talking about a very, very tight range here. I mean, if you can, all due respect, I mean, if you can really even call it a range, it's got 80 and a quarter, 80, and it's got support at 77.50. What is that? 250 times, that's 10 ticks, 10, 11, 12 ticks. By the time you fade getting in and out, trying to box it, slippage and commission, you're not making anything. And the risk is if you get stopped out, you're going to wipe out whatever you made in here anyway, right? You got to really, and how many of you are able to see these price patterns better now? The sloppy, the choppy ones. Anybody able to see this a little better now? When it starts happening like this, especially on NASDAQ? I'm talking about this chop right here. When you start to see it unfold, do you see it and you start to know to stay away from it? Because I know this was a big issue for a lot of traders. Many of you trade with us were really having a problem with this. You were letting this stuff beat you all up. Get all kicked around months ahead, take a bunch of losses, and then the thing finally breaks out and runs into the right over here. If I get one more run up. Getting better at seeing it? Doug? Okay, David, Tom, good. Most excellent. All right, let's pull another instrument down here. Just curious, show of hands, how many of you trade YM and how many of you trade the Russell? Going to look at some other instruments here. Of course, it's not going to be too surprising. It's going to look very much like what we saw in NASI. YM not TF, a lot of YMs, YM and an ES, YM not TF, no Russell, YM. Okay, so we got a lot of YM traders in here. Let's take a look at the chart, bringing it down right now. You know, I'm going to contrast the two charts, but first I'm just going to show you YM straight up, and we'll start with the open. Let me put a line at the open, and then I'll show you the chart. Hold on, give me 1 second, please. No surprise, it's going to look, you know, you're going to see some similarities. However, I'm going to make the case, and most of you know this already, and I'll just say it anyway, that YM was it was still choppy and it was range bound, but not quite as bad as NASDAQ was. Ready? Here we go. Here's the open of the market on YM. 630 right here. So where are we going to put our lines? In the pre-market session. It's like the nickel slots. Yeah, I mean, you know, the advantage of a $5 instrument is it gives you the flexibility to learn a little bit without getting creamed. If you get stopped out on a you know, one contract trade, you know, it's 10 ticks, it's $50. I mean, you know, between all of us here, you should be able to take a couple of hits at $50 and stay in the game and keep playing. So it's a low risk way to get in and learn how to trade without letting it you know, whack-a-mole your account around. You can take a few licks on it and still keep fighting. Yeah, okay, I see a couple of numbers coming in here. Yeah, absolutely. So you just, you know how to do the swings. Everybody does. There's a pre-market swing overnight here. For you new folks, we all know this is what we do. This is our pre-market routine. You can see we got another, you're looking back here, he's had a little support area, we got a little resistance, so I'd put a line there. And then you got, of course, you've got your support on the pre-market session sitting right down in here. Excuse me. Yeah, right in there, Peter. Let's see if there's any way I can blow this up a little bit more here. I'll try it like that. Yeah, so it's very similar to the NASDAQ. You didn't quite get to the mid-band here. Arguably, this was a short setup on the retrace. So you came out here, you're chopping down, you're trending down, you get a deep retrace, rolls over, back down, checks the bottom. Just shy of the mid-band. These are all short trades, right? I'm showing you short trades. All short trades. Short, mid-band short, roll over short, right in the open. And so I recall getting this a couple of 3 minutes into the session. We got a mid-band short right here. Some of you might have taken that, some maybe not. Now, when we see a market that looks like this, and we take the short at the mid-band, are we thinking to ourselves, hey, this is the day I'm going to collect 100 ticks on this baby, and I'm going to load the boat? $10 contracts, YM, and I'm looking for 100 ticks. You know what? I feel it's just going to run. It's going to break out, and it's going to run like a big dog. What do you think? No, that's right. No, absolutely not. What, in fact, I would go so far as it's too close to the floor. Good. You can, Doug. Let me explain that. Okay, so here's the deal. Look, we're shorting off the mid-band at 840. This thing is just jamming me into the corner here. I'm trying to get this thing to blow up. Give me a little more room to see it. Hold on 1 second, please. This thing is just jamming me all up there. There we go. All right, I was jammed in a corner in a hole down there. Yeah. All right. So we know resistance is up here, and we know support is down here. So our expectation getting into the trade is already set before we even take it. We're expecting a short, and we'll be lucky if we get 10, 12, 15 ticks, right? Now there's a question coming in from Doug. It's a little bit counter trend. He's saying, can we take the other side of the bet? And what he's saying is this, is that, when I cover my short down here at support, can I go ahead and flip it long? And the answer is yes. Now you have to be careful doing that, and that trade is not for everybody. Yeah, I don't know that I'd be buying up at the mid-band. That trade does set up later, though. Let's go ahead and extend this on. Let's talk about that for a second. Now, you're bouncing between the range where you're hitting its head at the mid-band, it's rolling over, and you get a short. You get a short here, you get a short here, and you get a little bit of a short here on a scalper. I remember taking these, right? If you were looking to buy, which in this case is counter trend because the background is red, we are range bound. However, we are still a little bit stair-stepping down. And, for all the various reasons, we're looking for shorts at this time. But if you do buy to cover and you were going to try to take along, you would want to do it here with an extremely tight stop. And furthermore, your target. So essentially what you're doing down here is you'd be trading both sides of the range, okay? To answer your question, if you wanted to play that game, and some of you can get very good at scalping and do that, as long as it remains within the range, you're good to go, right? But then we do get right here. What starts to happen right here? Pop up above the mid-band, and we start to get a little chop above the mid-band now. Came down, check this, start getting slopopotamus around. Depending on how you had your box drawn, you could have scalped a short here. I think we did. There's so many trades I can't remember. I believe we took the short, we stopped out, it went back in the box, remember? And then it took off. Then we got the long trade. You got another mid-band and started bouncing around right there. Long trade was this quick little pop right here. So it's not giving you much. I mean, I saw a statistic the other day. I can't remember where I saw it. I either read it or I saw it on a show somewhere that it is a record for the S&P 32 straight trading days of being in a range of 1% or less. That is record low volatility. 1% or less, 32 straight trading days, which is a little over 6 weeks or the bulk of the summer. Basically after Brexit, just like the 1040 I showed you. So, the bottom line is if you're going to survive in this summer choppy world, you got to put your scalper hat on and you got to figure out how you're going to trade it, or you just simply have to stand down and avoid it. If you say, look, Charles, I'm just not that good of a scalper. Every time I stick my nose in there, they bite it right off. I take losses. I can't stand it. It's frustrating. I want to learn how to scalp. I just can't do it. Well, then you know what? Maybe scalping's not for you, and don't do it. Let's come over here and look at something else. Let's look at oil. Yeah, don't keep, it's like the whole thing about sort of, getting frustrated and not hitting your head against a wall, or however you choose to deal with it. If it's not for you, it's just not for you. Especially, I want to underscore the fact that you should definitely not continue to do it in live money. Go into sim. If you scalp a little bit and you get nipped at the toes there a couple of times, please don't blow your account trying to scalp it and lose it. Everybody pinky swear with me that you're not going to do that, right? With the whole team, we're going to pinky swear here. We're not going to let the chop kill us, where we do so much damage to our psychology and our account that we can't fight to live another trading day, and by the time Labor Day comes and all the good volatility comes back, we've been cleaned out. Don't let it do it. Yeah, let's do that before we go to crude oil. Stand by. Let's get ES up here. Seriously, please don't do that. Okay, sorry. I'm trying to shuffle a couple of charts around here. Let's get ES up here on the table and see how she did today. Very tight range on ES. Went up and hit that 74.50 8,000 times, and then finally broke it. I remember because I was in that trade. Stand by, it's loading. Pete says, I've been in sim pretty much all summer. Good for you. Okay, you want to talk about a tight range. I'll just show the whole day and how difficult this was to trade. Here's ES today. Let me take these predictors off real quick so you can see it. Here is midnight Pacific on ES, right here. Top of the range was here from the pre-market, and even in the trading session, it didn't go much further than that. A couple of wicks above it, and the support in the pre-market was here, and then after the open, it was right here. So, after you did have a short here on ES, real quick. Here was a short here, right? Well, no, this was overnight. Let's get over to 6:30. Obviously, here was a short here. Came down here, find support. 6:30 was right here. So let me just box this in so you get level set your expectation for where you're at here. 6:30 Pacific was right there. So yeah, it opened up. I mean, after this rollover short, it opened up right at the bottom of the range. See that? And then this is the 74.50, 74 I was telling you about. See this mess right here? ES, this happens a lot with ES. Look at this, it's just a mess. It's too big to box. You get in the middle of this thing here, and you think you're getting long, and you get wicked into something. Next thing you know, you're stopped out, and then it pops up, gives you a little, you get some belief that it's going to just take this thing out and run. And when it doesn't do it, you pull it back and you say, well, you know what? Maybe this is going to hold here, and then it's going to bounce, and we'll get another. It's going to take off. Never does. Can't even get back to the top, and then it rolls over and goes down and checks the bottom. It's incredibly frustrating. Yeah, scalper mode. I mean, just to just to show you, illustrate what we're talking about here. The top of this box. Let's say, for instance, you say, okay, well, I'll take the top of that box, 74.50, 74 and 3/4, and the top you got out here at 70. That's 8 ticks. Not even 8 ticks. Probably 6 ticks right there. I mean, at least on YM and Nasdaq and the Russell, normally you can at least get 10 ticks, 8, 10, 12 ticks on a scalp. Here, just if you're going to trade ES, and I do, your scalpers are as little as 2, 3, 4, 6 ticks. So they're half. They're half to a third of what the moves on the other instruments are. Just to set your expectations on that. I mean, even if you got the short here when it rolled over, took out the support under the midband, you got filled on that bar there at 71 and 3/4, 72. The bottom down here at 68, 50. I mean, what is that? That's like 4 times 2, 8 ticks maybe on this short. And that took you all afternoon. Yeah, just, let me tell you, so here's midnight. This is the entirety of this chart. This is how amazing ES is sometimes. Here's midnight. Here's 6:30. Here's 8 o'clock. So you're an hour and a half into the session, and this is all you've seen right here. That right there. That's an hour and a half in. You get lucky at 8. You pop up. Looks like it's going to run, then chops around. Now you're at 9:30. That's an hour and a half just to do this. And then for the rest of the day, all the way down here till 11:30, 2 more hours to get down to here. It's mind-numbingly choppy. And then there's the close. Yeah. Well, I understand that. Look, let me tell you some feedback that, well, no, I scalped it. I scalped it, David. I've been trading ES long enough where I know what these patterns look like, and so I scalp it. And I don't put a lot of size. On a day like today, I hardly put anything on it. I'm putting like 1 or 2 or 3 contracts on it. I'm just scalping it. I'm just watching it because, what happens is I watch the other instruments. I watch highly correlated with YM. What I like about this is that if I see out, YM usually leads ES. So if I see, like over here, for instance, if I took these 2 charts right next to each other, I would bet that ES would have been moving in here, up, in here. YM was already breaking up ahead of this move right here. I like that. I watch that all the time. Doesn't happen all the time, but a lot of times what will happen is YM, NASDAQ, the Russell will start a little move up. This is a laggard, and I know that it's going to take ES with it. So that's something to watch. So I know David D. So here's some of the feedback I'm getting is it's frustrating. It drives me crazy. I feel like I need to do something. Well, here's the thing. You can't make the markets. We can't will the markets to move. We can't do that. So, we have to accept what the markets are giving us. We have to use the tools to get in and out. We have to make a conscious decision based on what I see here. Am I going to trade it? Clearly, the answer is I'm going to scalp it if the answer is yes. And then I just have to set my expectations such that, okay, I'm going to take a trade. I know resistance is right here. I'm going to scalp it. I take a short. I know support's right down here. I'm going to take it and I'm going to cover it. Some traders, okay, and you have to get really good at this, can trade both sides of the range. What does that mean? That means that when it gets up in here, they're shorting it. That's a little bit more advanced technique. Like the question earlier that came in. So down here, for instance, you're short, you're covering as support, and there are some traders and there's programs, scripts that are in the market buying down here. If you take the opposite side of the trade and you buy down there, and you can work on the skill set yourself with the tools like Object Trader, and then you scalp it right back up into here. So you're trading support and resistance. It's no different than we trade all the time. It's just how you choose to approach it. If you approach it more in the traditional manner, then you're taking the retraces off of mid-bands or other support and resistance, and you're scalping the trade like such. If you're taking, you like to trade both sides of the market, long and short, scalping, then you're buying support also, right? And you're shorting the top, and then you're taking coin at the mid-band and trying to flip the other side. Yeah, you know, you're going to see, Dave, question on ES here in the equities. How do we see the lunchtime hour workout? Uh, you know, and I see this pattern a lot on the equities is here. Let me, you know what? I have a good way to illustrate this. Let me give you a second. In fact, I looked at this the other day. Let me see if this helps you at all. Let me try something different here. Hold on, I'm going to do this. We don't normally show this. It's a little bit off the grid. But I thought it was pretty interesting. I think I can do it on an ES chart. Let me just make one adjustment here. Stand by. Essentially, what was Dave H is asking, New York gets back from lunch from 10 a.m. Pacific. Is that when they get back from lunch? And the answer is yes. However, there's more to it than that as far as the volatility is concerned. Oh no. Oh no. Oh no. Oh, I shouldn't have done that. Wonder if I can fix it. I tried to put a 30-minute chart up and it went back a year. Oh, I wonder if this thing's going to load or not. Stand by, please. 1 second. There we go. Okay, now let's look at ES. Now, here's one thing that I looked at the other day, and this is kind of an interesting study. And you can do this on your own instrument that you like to trade. And it's just a rule of thumb. It doesn't work every single day, but some days it works pretty well, better than others. It's like anything, right? I forgot to show something. Let me fix this chart. One thing I wanted to show. Stand by. I'm just going to fix one thing here real quick. Just give me 1 second, please. And it's like everything we show in here. I mean, we show different things to look at, and you can choose to take away whatever, however you like to do it. You know, if you find something of value that I'm showing or Gary shows in the room, take it and make it your own, and it you know, use it to make you money. If you don't look at it. But in answer, follow up to your question, Dave, about the volatility. Essentially, his question is, how do you know about the volatility? So watch this. Look at this. Here's ES. I'm going to really blow this up, and we're going to look at this in detail. I'm going to show you something here. Here is the volume at 6:30 on ES. Let me see if I can get this right. It's going to let me do it. It's trying to get it. Let's see if I can do this. Silly thing. It's this tiny little one right here, okay? Here, maybe I can do it this way. Oh, you're being a little bugger tonight, aren't you? There you go. Sometimes they work with you, sometimes they don't. This candle is the volume at 6:30, and this was the bar at 6:30. Right here. This was the bar at 7 o'clock, and this was the volume. And to just give you some idea what we're talking about, this bar is 200,000 contracts traded between 7 and 7:30, and this was the bar on ES. Man, you are really getting my goat tonight. Right here. What is this telling you? Here was the volume, and here was the bars at 7:30 and 8 o'clock, and all the way to 8:30. I'm just going to box them in. Here. And here. When you look at this chart, what is this telling you? Everybody, what is this telling you? And then here's what happens at 9 o'clock, 9:30, 10 o'clock, off until the later part of the morning here. You do get a huge bar here at 11. That tends to happen sometimes. And then this is the close of the market right here. This was the close. This was the end of the market close. So you get these huge, enormous spikes of movement right at the end. You get it right at the open at 7. Okay, so let me just explain what's going on here. This is buy and sell programs kicking in. So the programs don't start until 7 o'clock. Okay? They start at 7. Pretty much most of the equities. Now you do get some movement at 6:30, and we still take trades at 6:30. It's all institutional. That's right, David D. Everyone starts trading at 7 a.m. That's right. On ES. I'm talking about ES now. Go back and look at almost every day on ES, and it's going to look almost exactly the same. Every day looks like this. Every day. There are exceptions. Very rare. But most every day looks like this. At 7 o'clock, between 7 and 8, 8:30, you get an enormous spike in volume. The 6:30 bar is nothing. You might get some volatility. I'm not saying you don't get any movement, but there's no volume on it. Okay? You get enormous spikes. The buy and sell programs, in this case it was clearly a buy program. Buy programs were engaged, and it drove the market all the way up to here on huge volume. Okay? Here, let me show you. Oh, I don't think it's going to show it. Like 100,000 contracts would be the Russell for an entire day. That's one 30-minute session here. You might get 50 to 100,000 contracts trade on NASDAQ in a typical day, or YM in an entire trading session, 50, 100, 120,000. This is all coming in 30 minutes. This is 200,000 contracts in 30 minutes. So that's serious institutional trading. That's the big banks buying, and they're pushing the market up. Right? And this speaks to the whole lunch hour thing. So what do we think our little robots are doing in here? The volume dries up. Well, technically it's not really, as far as the other instruments are concerned, this is still huge volume. These are 50,000 contract bars. But it's nothing compared to over here. So the bulk of the trading is done in the first between 7 and 8, 8:30. The buy programs turn off right here. Over here you had a sell program kick in. 100,000 contracts, sell program, takes it all the way back down. Here was your sell programs. That's exactly what that was, right there. Right here. See it? See these enormous sell bars? 100,000 contracts each. So this is when they get back from lunch. The sell programs were engaged, right here. You can watch this in real time too, by the way, if you find this information useful. I don't know that I'd necessarily trade off it. It might help you see what's going on in the market as far as, yeah, they had their martinis. They came back and they had the sell bot program. And 200,000 contracts worth of sell programs take it all the way back down to the bottom. And then, of course, what happened at the end, at the close today? They sobered up, right? They sobered up, and the buy bots came back. And they drove the market right back up. Pretty cool, huh? Anybody ever looked at that? There's your buy programs. There's your buy programs, 7 a.m. to 8:30. And there's your sell programs right there. Right after they get back from the 3 martini lunch. Hit the sell bots. Turn on the sell bots, Big Joe. Okay, Big Jim. Sell her down. Taking her down, Big Jake. Down you go. Does that help everybody see what's going on? You can choose to integrate this into your trading. It may or may not apply to your instrument. I just thought this is interesting. I studied this. I came up with this about 2 weekends ago. And I've been kind of keeping an eye on it. Yeah, I've been keeping an eye on it. It's interesting to see. So what I'm saying is, specifically on ES, I don't trade 6:30 anymore. I stopped trading 6:30. There's no volume there. So I don't even look at it. 7 o'clock, I start to peak up, and I go in and I start to look at ES because I know the buy program. I know institutional buying and selling is coming in. There's going to be excellent liquidity, and I can kind of load the boat. You want to look at You want to look at yesterday? Yeah, real quick. Sure. Okay, let's go look at. You want to look at a couple other ones like this before we wrap? You want to look at YM or something else? You want to look at NASDAQs in a similar fashion? Here's yesterday. Here's the 630 bar on volatility right here. Oops, wrong way. See it? That's 630 yesterday. Here's the 630 volume bar yesterday, right here. This one, this tiny little one right there. See it? What happens between 7 and 8:30? What kind of program had kicked in on ES yesterday? What program was engaged at 7 a.m. yesterday on ES? Buying or selling programs were running from the big boys. Look at the volume, look at the bars. What was at work here? Selling. Selling programs were engaged. Right? Lunchtime comes. It's time for some martinis. Let's go have some cold ones. Come back at 11:30. What button were they hitting? Yeah. Let's go ahead and hit that sell button a couple more times. Take her down further. And then what do we think this is right here? Right at the close. What do you think this is? Anybody? What is that right there? With this huge bar and 260,000 contracts at the close. Excuse me, what is that? Short covering. Good. So what happens? So what's happening here? Well, you had all this selling, short bots, short programs, sell, all over the world. All these bots are selling. Yes. You get all the way to the end of the day, you had all this selling. What needs to happen? You got to buy it all back, right? You got to cover it. Excuse me. 260,000 contracts, buy them all back, right off support there. Good. Tell you what, it's just a study I did. Look, it's something I did off the cuff. I just thought it was interesting to watch every day and kind of look at how that works. And I noticed a pattern there. That's all I'm sharing with you, really. I mean, you can choose to look at it. You don't have to. Want to look at YM real quick? Some of them hold overnight. I mean, you can look at the volume here. Some swing traders, traders who hold positions for a longer period of time, yeah, they can hold them overnight, weeks or even a month at a time. Yeah, but you can see there's no volume here, right? Look at the volume. This volume is like non-existent. See these tiny little stubs? See the little stubs down here? They don't even register on the chart. These little stubbies. This is the pre-market here. It's 2-3 in the morning. It's European session right here. Little tiny stubbies. I mean, sometimes it's chopping. Sometimes you get movement. There's very little liquidity, and you can get some slippage. So, yeah, go ahead. All right, let's pull up a YMer real quick. And we can do NASDAQ too if you want. We'll stick around a little bit here. Let's do a quick study. Stand by. Let me clean up this chart. I got all kinds of stuff on this chart. Give me a second, please. This is notes left over from somewhere. I don't know where all this drawing stuff came from. Let me clean it up a little bit. Give me a second here. Almost done. I'll clean this puppy off. All right, here we go. Here's YM. Here's today. So what kind of programs kicked in at 7? Well, we already know, right? What programs were running at 7 a.m. on YM? Buy programs. Yep, just like ES. I just noticed on the shorter time, it's going to be very similar, almost identical programs running on all the equities. So you're going to find very, very rare when you find a complete disparity between the two. But look at the difference in contracts. Here your peak was 15,000 contracts, whereas it was 150, 10 times the volume on ES. This was just no volume at all. And then here was your 630 bar right here. Now notice on ES or YM, you do get some movement at 630, right? You do get some movement right here. See it? But the volume is terrible. I mean, there's just no volume at all on it right here. See the volume? It's like non-existent. Can't really load anything up on that puppy. Yeah, I'm basically, so what is this about, Doug? Yeah, I'm just trying to see, I use this to try to see, first of all, the time at when I can expect movement. And I know it's 7 to 8:30. I know that clearly now. I do have a 30-minute I sort of loosely keep an eye on a little bit, and I watch these bars form, and I watch the volume to see whether it's buy or sell programs kicking in. And I watch the volume pretty heavily. Over here, for instance, we can see that sell programs were driving the market. You know, over in here, 11 o'clock, come back from lunch, 3 martinis, hit the sell button, turn the sell bots on. And trust me, this is all computerized trading, all of it, almost all of it, 90% of it, 80+% of it. You have a few discretionary traders sprinkled in there, but you know, obviously discretionary traders aren't going to handle 15,000 to 150,000 contract. That's all computers all over the world running scripts, thousands of scripts, tens of thousands of scripts. So, you know, and they're clusters of them. I can just tell you that's how it works. And then, of course, here's your short covering rally with the buy programs right into the close. And there you have it. Yeah, I mean, it's just something fun and interesting to look at. And if you find it useful, keep an eye on it. If not, you know, don't bother bringing it up. It's totally your call. But that's been my observation. I'm sure NASDAQ would look very similar to that. You can put crude oil up there if you trade the Russell, pull the Russell up. Gold, I know some of you trade gold. Dollar index, you can look at that. Of course, those timings are going to be a little bit different. Put 6E and some of the currencies up. You know, the spikes would occur overnight in the European session with that. Yeah, okay, good. Some of you like that. Yeah, okay, Doug, Pat, David, thank you for that feedback. Yeah, that's what that is. If you're ever wondering what's going on, that's heavy institutional activity trading the equity futures markets. You can see very clearly on here when the buy programs are running and when the sell programs are running. And that very clearly the spike in volume occurs almost every day right at 7 a.m. like clockwork. You know, she's going to kick in and off she goes. They tend to push the markets one direction or another. Sometimes you'll get continuation, just like a trend, right? And then sometimes you'll get reversals. You'll see the market just starting to sell off like that, right? And then into the close, you usually get buy or sell programs with another spike in volume right at the close there. Squaring up your positions, that's what that is. Yeah, why fight the trend? Yeah, I mean, just keep an eye on it. See if you like it. I'm going to stop the recorder right now. I went way over here tonight. My apologies. Any final questions?